Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of a surprisingly weak American jobs report for June. There is no World Cup bounce here, and economists are divided over whether the Federal Reserve policymakers will be holding rates steady, lifting, or lowering them over the next 6 months based on this data. The US economy added just 57,000 jobs in June, the weakest gain in 4 months and far below expectations of 110,000 gain. Their labour force participation rate dropped sharply to 61.5%, its lowest since early 2021. But seasonal adjustment has a lot to do with these headline results, and the actual payroll change isn't anywhere near as weak. However, when you broaden this view to everyone in employment, not just those on company payrolls, things don't look so good. There are now 162.7 million people in employment in June, down 175,000 from May and down 1.2 million from June a year ago. In fact, that's employed civilian workforce level is their lowest since the end of 2024. US jobless claims rose last week, but only marginally and by about what seasonal factors would have accounted for. There are now 1.76 million people on these benefits, pressed lower by much tighter entitlement standards, which is consistent with the employment drop. US factory orders fell 1.3% in May and were down 4.5% for durable goods orders. This needs to be seen, though, in the context of rises in the prior 3 months, and April was revised higher. From a year ago, though, the value of these factory orders were only up 1.8% and down 4.3% for durable goods. Given producer price inflation has been high over this period at 6.5%, these are terrible results. And surprising given the factory PMI data, so we should be sceptical of them. But don't forget, this data is from agencies with imposed partisan leadership that replaced professional leadership when the president unliked their earlier data. Meanwhile, US vehicle sales rose in June to an annualised rate of 16.5 million, a rise from May and from June a year ago, so that demand may improve their factory order data for June. The US vehicle market is about half the size of the Chinese equivalent, which currently runs at 31 million annualised sales rate. We got all this data today because tomorrow they will be on holiday for their 250th 4th of July celebrations. It is a milestone worth celebrating, but the background economy will likely take the gloss off it for those negatively affected. In China, those huge vehicle sales numbers mask structural problems. Prices have been low to build volume, but few of these manufacturers are profitable. A dramatic shakeout is coming because sales volumes are falling now, and that is already having implications for their steel industry, amongst others. In Australia, their May exports fell 6.9% from April to be just 3.1% higher than a year ago. Their imports were 2.6% higher, though, than April, to be 13.9% up from a year ago. So their merchandise trade balance shrank to a $1.7 billion deficit in May, their first deficit since January 2018. And they also reported that after hitting 7.9 billion sales in February, their gold exports retreated to just 4.5 billion in May. Global container freight rates rose 9% last week to be 61% higher than year-ago levels. This is all about demand for outbound cargo space out of China. Bulk cargo rates fell 2.8% last week to be 72% higher than year-ago levels, although that low base will rise quickly in future weeks. The US Treasury 10-year yield is now just on 4.48%, unchanged from this time yesterday. And the price of gold has risen to $4,106 an ounce, up a net $36 from yesterday. Silver is now just under $60.50 an ounce, up 50 cents from a day ago. And oil prices are up 50 cents as well, at just on $68.50 a barrel in the US, while the international Brent price is unchanged at $71.50 a barrel. Hormuz transits have stayed at their lower level after the recent volatility and uncertainties, with just 19 crude or product tankers exiting over the past 24 hours and 24 entering for new loads. Over 84% of vessel movements are related to cargoes headed to China, Russia, or are Iran-linked. The Kiwi dollar is up 10 basis points from this time yesterday at just over 56.9 US cents. Against the Aussie, we're unchanged at 82.3 Australian cents. Against the euro, we're down 10 basis points, just on 49.8 euro cents. That all means our trade-weighted index starts today at just on 60.8, which is up another 10 basis points from yesterday. And the Bitcoin price starts today at $61,635 and up 2.5% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.